This is an Uncovered Japan company research report on Kasumigaseki Capital, ticker 3498. It is a Japanese real estate platform built around social themes: cold storage logistics, inbound hotels, hospice care, and selective overseas development. The central question is whether an unusually high return growth model can justify its risks in a rate-sensitive property market. At the 3 July 2026 reference price of 7,050 yen, Kasumigaseki traded on roughly 10.5 times forward earnings. That sits beside a 32.5% return on equity in fiscal 2025 and a 5-year revenue CAGR of about 61%. The tension is that the same growth requires a large property inventory, which had reached about 89 billion yen by fiscal 2026 third quarter. Kasumigaseki is more than a developer that sells a finished building once. It sources land, plans and develops specialized property, then earns land and property sale gains, project management fees, performance-linked success fees, and recurring asset management fees. Its own listed hotel REIT can provide a downstream exit for stabilized hotel assets. This is the mechanism intended to add a recurring stock layer to a lumpy development pipeline. The portfolio has 5 themes, but 2 drive most expected fiscal 2026 revenue. Cold storage logistics accounts for around 38%, and inbound hotels around 35%. Logistics addresses aging refrigerated warehouses, labor constraints, and regulatory change. Hotels are linked to inbound tourism and accommodation supply. Healthcare, energy, and overseas projects provide longer duration optionality, but also add execution risk. From fiscal 2021 to fiscal 2025, revenue rose from 14.3 billion yen to 96.5 billion yen, while operating profit increased from 1.3 billion to 18.9 billion. Operating margin expanded from 9.3% to 19.6%. Scale helped, but the report's more important explanation is mix. Higher margin project management, success and asset management fees grew around the development flow business. Operating profit and net income have compounded together, but the gap matters. In fiscal 2025, ordinary profit was below operating profit, partly because borrowing costs rise with the development balance sheet. This is why the operating story cannot be separated from funding. The company can earn strongly on projects, but it carries capital and rate exposure, while those projects are held as inventory. By fiscal 2026 third quarter, total assets had reached 192.7 billion yen, including 89.3 billion yen of property inventory. Interest-bearing debt was around 99 billion yen, while the equity ratio was 38.7%. The balance sheet enables a bigger development pipeline, but makes funding costs, exit values, and potential inventory write-downs central variables for investors to watch. The competitive advantage is a platform. Kasumigaseki combines property brokerage, financial instruments, and real estate joint enterprise permissions with in-house design capability. Its specialized niches are harder than generic apartment development, and its hotel REIT can improve exit certainty while creating asset management opportunities. But the moat is young, can attract competition, and depends heavily on the founder-led team continuing to select the right themes. Management's fiscal 2029 plan targets 50 billion yen of net income and 1.5 trillion yen of assets under management. That follows an earlier plan that was achieved ahead of schedule, but it is still a demanding 5-fold increase from fiscal 2025 net income. The research base case intentionally assumes only about half the net income target, making clear that strong strategic logic does not remove the financing and execution hurdles. On the report's peer comparison, Kasumigaseki earned a 32.5% return on equity, yet traded at 10.5 times forward earnings, broadly alongside slower real estate peers. The market may be discounting the durability of late-cycle returns, rising rates, and the capital intensity of development. The constructive interpretation is that the multiple does not fully credit the platform and execution record. The report's 3-year scenario framework ranges from roughly 4,650 yen in the bear case to 12,860 yen in the base case and 26,465 yen in the bull case. These are disclosed scenario estimates, not price targets or recommendations. The bear case is concrete. Funding costs above about 3.2%, property cycle pressure, fourth quarter deal slippage, land sourcing slowdown, or further dilution. Kasumigaseki Capital combines a differentiated, 4-fee development platform with powerful logistics, tourism, and demographic themes. Its growth and return profile are exceptional, but so is its dependence on capital, deal timing, and funding conditions. The practical scorecard is short. Watch average borrowing cost, inventory discipline, fourth quarter execution, and dilution. This has been an Uncovered Japan research report for education only and not investment advice. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.